Hey everybody, welcome to my YouTube page. This is Fiscal Runnings. I am working on a finance metric sheet that spans 12 weeks. This is actually for my two businesses, what I personally use to have a bird's eye view of the financial metrics in my businesses. This spreadsheet is for sale on my Etsy page, so I will link that in the comments section. But I wanted to create this for you to really see how a real business utilizes this sheet for the owner to get an idea of what's going on in their business. So I'm going to walk you through the spreadsheet and kind of try to explain each column and each row and how we do it in our business. So you can see across the top, we have our weeks. So all of these columns are pretty much just divided into 12 weeks. So we create a new sheet every quarter. So this one took us basically through the second quarter of the year. So I have my week number and my dates as well here, just to kind of keep us all on track. And we know, like when we're reporting these numbers, we do, the week, like we basically do Saturday to Friday. So the date that's here will be like the last date of that period in that column. So we make sure that everyone is tracking the same time period. So going down on my rows here, these are the things that I measure week over week. So the revenue from the past 4 weeks is actually a calculation of what was actually collected, like cash on hand over a 4-week period. So for instance, this $197,000 that's on May 19th is actually from our collections over the past 4 weeks. So it's 115,000 plus 56,000 plus 0 plus 24,000. So this is a calculation that just shows us like how much cash we collected, and it also flows into this DSO number on the bottom here, which is the days that your services were outstanding, which is basically just like an average number of days that it's taking cash to flow through your business, just based on what's in your receivables and what you collected over the past 4 weeks. So these two are actually calculations in the spreadsheet that I don't really touch. I just enter all the other numbers and those auto-populate for me. So the AR, we run an AR report. AR is accounts receivable. This is money that your clients owe you. We run an AR report from QuickBooks every week for the day ending in this period. So this is also the person that's assigned to this metric. So Jen she'll run a report in QuickBooks for April 21st to see what is our current AR balance. So our total AR balance for that period is $243,000. Out of that, $152,000 is under 30 days. 81,000 is between 30 and 90, and then this 9,000 is what's over 90. So in our business, we have certain rights. We have lien rights, mechanics liens, because we're in construction and in plumbing, where when we're approaching certain deadlines, we have to legally take those timelines into consideration. So when something approaches 90 days, I really need to make sure that I'm on top of that, so that if it needs to go into filing something, with the county or with our local jurisdictions, I make sure I do that to cover and make sure we will be able to collect. So these numbers just kind of give us like a good idea of like I call it money on the streets. How much money is on the streets that's ours. So, on April 21st, I had 243,000. Then I probably billed a little bit more. I had 354. Then I collected a little bit. Then I collected a little bit more because it went down to 209, collected more. You can kind of see the fluctuations here. I had a good billing cycle between the 9th and the 16th, so it went up. So I always know how much is on the streets. That's my money. So that means like my AR, Jen, is like actively collecting and chasing down these funds from our clients. So if I'm growing my business, obviously I want to see my AR growing. That means that business is going well. I don't want to see it go from 500,000 to 100,000. That's not going to be good for me, unless that just means I'm collecting in one day, but that's probably unlikely. So collections, as I mentioned, is what was actually received in that week. So in this week on April 21st, we collected $24,000. which is honestly not a very good week of collections for us because our payroll is $22,000. So we really need to be collecting more than that. The next week we collected zero, so that's not good either. So you can kind of see these numbers fluctuate week over week. And that just helps me with my cash flow projections to know what I need to put in, if I need to pull in my line of credit for a week or what I need to do with that. Accounts payable is what I have in my accounts, what I have in AP, vendors that I owe. Ideally you want your payables to be less than your receivables. You can see this was kind of upside down for a while for us. So we definitely, we're working towards kind of minding that gap, flooding the business with some new sales to make sure that our receivables went higher. We can collect some cash. This just keeps us in mind of like how much is out there that we owe. Sub money on hold. This is just unique to my business. I put this one in here because I need to know how much money I need to have like on hand for my subcontractors. So that's what those numbers are. And the days services outstanding, I already kind of mentioned this, but it's the number of days that it takes cash to flow through. So it's a calculation based on how much you collect versus what's in your AR. So that gives you like an average number of days that cash flows through your business, and that changes week over week. Overall, I average this out through the whole 12 weeks. It's 16 days, which is pretty good. Construction, we have like quite a few private clients that pay us pretty quickly. But then we also are mixed in with some government entities, which could take up to 90 days to pay. So, it just depends. So on average, 16 days, which is honestly a great DSO number for our industry. So payroll, this is a number where people are responsible. Construction, I have pretty much everybody on salary, so it doesn't really fluctuate week over week. You could see 29,000. This was higher because we pay out bonuses once a quarter. So this team hit their metrics, so they got their bonus. 22, like this is pretty steady. It went down later in the quarter because we just were rearranging some people. Labor hours, this is the number of hours that I need people to work. This doesn't really apply in salaried businesses, but when we get down to look at plumbing, I like to look at how many labor hours I'm supposed to have based on my head count and how many hours we did or did not hit. So meaning if I'm supposed to have people hitting 1,825 hours based on my headcount of 48 people working 40 hours a week, and then you take into account overtime and any PTO that they took, how much time am I missing from that? So that means like I'm showing 49 hours. So I'm missing 49 hours of work. Basically, somebody called out sick or somebody had unpaid PTO. Like this impacts your business in ways that you probably don't even realize. If you have too many people calling out sick, that impacts your bottom line because, you had production that you were anticipating getting done that you couldn't get done because people called out sick. And so I just like to keep this in mind because if it ever gets too high, I know that I need to address the issue, with their managers or with the field with who we have going on there. So it doesn't as much apply in my construction business, like I said, because they're mostly salaried. And then the other thing that I started to measure this quarter was the percentage of people clocking in and out. So what's really critical in our construction business is that people track their time to a job. So people need to enter timesheets. They need to make sure that all their time is allocated because of the way that our financials flow. So I started measuring this to make sure that everybody was tracking their time. As you can see, some people are not, so probably something that I need to address. But this sheet gives me like a good indication of what I need to do, just based on that. So moving down to plumbing, most of these are the same, but I want to like show you how it's different in both businesses. So my DSO average in construction was 16 days, but in plumbing it's 104 days. And that unfortunately just means that I'm covering costs for 104 days in my plumbing business, which if you don't have a good line of credit, if you don't have good capital, that can be very difficult. So this sheet really kind of puts